Hello and welcome to Crypto Weeklies. Today we are going to discuss yet another gem of the asset class, of the crypto asset class, which is HBAR. It's not in the gem zone per the efficient frontier that we have, which consists of looking at the annualized reward since 2021 and annualized volatility. HBAR features in the top right quadrant. It's not in the gem zone, but it is in very desirable zone over here where the annualized returns since 2021 have been 30%, which is, again, for context, even Bitcoin has had less returns since 2021, annualized at only only 21%, but the volatility of Bitcoin is only 53%, whereas HBAR has a higher volatility as it's an altcoin. Nonetheless, even the Sortino ratios are in proportion with respect to Bitcoin. So that warrants some attention. Again, not financial advice. This is how it's calculated, as mentioned previously. You can read up on the definition um, of the ratios, as well as it considers the max drawdown as well in the tooltip. Again, for example, for the least riskiest assets, such as even for Bitcoin, again, the volatility is favorable compared to, again, lower drawdown and lower beta, higher alpha, and better Sortino ratios. So that's the hallmark of great assets in this asset class. HBAR over here, in terms of the composite risk ranking, is in the top quartile. Again, the overall composite risk is at 0.48. It's not as great as Bitcoin or BNB or Tron, but again, it's slightly doing better than ETH, which is at 0.50 in terms of the overall composite risks score, based on alpha, Sortino ratio, volatility, beta, max drawdown. So that's again how it is normalized between 0 and 1. That means, again, it falls in the desirable category. In terms of, again, it's as it is not in the top 10 cryptos by market cap, again, excluding stablecoin. It's not part of the gem hunter portfolio, but one could make a case that even the components which are part of the gem hunter portfolio, such as Aave and Maker, have again, not Maker, just Aave has a higher composite risk score than even HBAR over here. So uh, coming to the price analysis, again, this interpretation, again, this is a live model. This is available on cryptoweeklies.com, link on the bottom of your screen under portfolio builder section. This is the analysis of major crypto portfolio, and again, this is the gem hunter portfolio of top 10 cryptos by market cap. This is also available and gets updated every day to identify what's happening in the market and how portfolio rebalancing makes some sense, especially as we are entering the bear market phases. Coming to HBAR's own interpretation, again, standalone analysis of HBAR as a um, forecast, as well as analysis as risk based analysis for HBAR, starting with the technical levels. HBAR is at around 10 cents right now. Again, these are the monthly candles. You could easily draw a line to identify what could theoretically be a bear case in 2026 for HBAR, closer to that 5 cents level, or 6 cents, lower 6 cents level for HBAR using the monthly candles. Right now, the price of HBAR is below the 200-week simple moving average, which is this white line which turns blue whenever the price is above 200-week simple moving average. Right now, it's in white color. And also the green line which turns red when the price is below 300-week simple moving average. So a rally to 200-week simple moving average is, again, if that happens, that price for HBAR could go to above 11 cents. If it rallies above 13 and a half cents, that would be above 300-week simple moving average. So this is HBAR since inception. Uh, did not have a new all-time high, unfortunately, in 2025 or 2024 compared to the 2021 high, but came really close to it. And again, in this in the last bull run, again, major altcoin season did not occur. Still, HBAR managed to go to almost the same levels as it went to 2021. So that's something to be said about HBAR. In terms of the technical levels, the third peak, unfortunately, never came. The descending line that we had drawn back in June, July 2025. there wasn't any major alt season towards the end of year 2025, and again now the price has come down crashing since that peak in June July was behind us. And then the next series of bottoms, again if there is a higher bottom, the range or the horizontal uh, parallel channel where the price could go in the bottoming phase starting over here. Let's draw this as a midpoint, and again the end of the zone. If there is a higher low for H bar in this 2026 bear market, the end of the range is all the way at around 4.5 cents. The midpoint is at around 7 cents. Again, price did go to that midpoint and find support in early February crash for H bar. If there is a new low or a lower low than the 2023-2024 bottom for H bar, or the 2022 bottom which was tested back in 2023 as well, if that low gets taken out, and then there's next series of lows is all the way at less than a cent or between a cent and 2 cents for H bar. Again, that would take some recession to get to that level. Nonetheless, again, now that we have concluded our H bar technical analysis, we can focus on our own website and the risk-based interpretation of what all of these could mean for H bar, not financial advice. The time-weighted average price-based model says that H bar is right now in an accumulation zone where the price is below the blue line. This is easily understood as a gravity of time, the gravity of time based model, which indicates again just not indicating what the price is at this point in time, not just the current price, but indicates where the asset has spent its entire life. The blue line, that is time weighted average price. Whenever the price is below the blue line, it's usually accumulating at that point, is essentially beating the clock by entering a level where the market has historically spent very little time in that zone. uh, and then again above it's again borrowing from the future. That means again the price could go to those levels, but it's not again well digested at those levels. That's why the risk color codes turn into higher shade or darker shades of yellow, orange, or red. And the last time the risk level at the peak was at around risk level 8. It's now risk level 1. The difference between the price and the time weighted average price is negative 21%. At the bottoms in 2022 it was well over 70%. Even over here, in before the 2024 rally took off, the difference between the price and the time weighted average price in the 2024 bottom was close to 50% or more than 50%. That's something to look forward to in 2026. Again, the time weighted average price did get shifted thanks to its bullish 2020 later 2024 early 2025, where the price spent a considerable amount of time above the time weighted average price, essentially pulling the time weighted average price above with it. So 50% low from here, the price could bottom at around 6 cents per this model. Again, you can use this model to filter out the noise and measures the conviction of a asset over time rather than temporary volatility. For example, a god candle here, a flushing candle over there, tuning out that noise using the time weighted average rather than intraday or intra week volatility. Again, personally for altcoins, again, any time when the risk level is in risk level 1, if major assets such as Bitcoin and ETH have bottomed for that cycle, and the drawdown from the time weighted average price is close enough to 50%, then again looking at that kind of accumulation makes sense. The composite risk for H bar, again, if we go to the full report over here, um, you can check H bar composite risk is at 0.26. Again, we looked at one of the models which is component of this composite risk model. Again, whenever it's less than 0.3, it's in the safe zone. Time weighted average price deviation is about 18% weightage of that model. The highest weightage are for the drawdown from all time high and the logarithmic regression based uh, deviation from the fair value. So we are going to look at that model now, the log regression based model. This model identifies what's the fair value of H bar, which is at around 11 cents. The price is below it. That means in terms of the regression based fair valuation, H bar is undervalued from that based on that model, but it's not as undervalued as it gets towards the end of the bear market. That's the one standard deviation residual drawn away from the fair value. That valuation for H bar is at around 5.5 cent. And if H bar were to bottom at that level, again, it did not bottom at that level in 2023 or in 2024, late 2022 and early 2023 as well. You can see bottom usually occurs when the price goes below the green line. The green line back then was at around 5.3 cents. Now it's at around 5.5 cents. So slight improvement in terms of how the price action is containing that containing the 2024-2025 bull run and getting impacted in positively with that upward bias of the regression based model. Um, this model again has some wiggle room to the downside. The 20-week simple moving average price based model says that the time to DCA for H bar has come as H bar has spent several weeks or several days, I should say, in this regimen where the accumulation risk is less than 0.1 or less than 10%. So this model is favorable, has signaled favorable. So that's why the overall, you can see over here as well, the overall weight or overall composite risk is less than 0.3. So now we move to, again, we covered the regression model with time weighted average price model, the SMA model. The drawdown from all time highs are evident from the technical analysis over here. Again, the drawdown from the 57 cents to the 10 cents level have been more than 60-70%. So that drawdown aspect is also providing indication that the asset is in an accumulation zone. Now, looking at the technicals such as volatility, beta, and Sharpe ratio, we have this composite model, that composite risk model that we discussed in the portfolio builder. At times, again, it looks at the overall risk of accumulation, which is at 0.48. Again, compared to the rest of the asset class, it's certainly in the top half, or even you could make an argument it's in the top quartile H bar right now. So that's why the overall risk is less than 0.3. All in all, if we were to estimate a bear market bottom for H bar, looking at the machine learning price forecast, which looks at last weekly price action since the launch in 2019 and looks at what could theoretically the bottom look. Let's say if there is a 3 months of negative bearish seasonality in 2026, so starting March, April, and May, towards the end of the month of May, if the price were to bottom at that point, the bottom could be slightly less than or equal to 5.5 cents. So that's the bear case scenario for H bar. If there is one major counter trend rally up between now and then the floor gets shifted by a couple of cents. If there is a rally first to 15 cents level, let's say March is bullish rather than bearish, then this gray line has a starting point at 15 cents rather than at 10 cents. That impact gets featured into this price floor. Instead of 5 cents, it could well bottom out at around 6 to 7 cents, coming back to that zone over here where the price, again, the ascending red line over here could take the price at the bottom at around slightly less than 6 cents, whereas the midpoint model over here, the price, if at the bottom goes only low as 7.5 cents, then that could be a great DCA time for H bar. Nonetheless, all in all, if we were looking at a bear market bottom which looks at all of the individual models, at least the risk based individual models, and tries to come up with a price where the price could of H bar could bottom, the base bear case for this bear market is about 33% down from over here at 7 cents. Price of H bar did go to that 7 cents level in early February. That was when the base drawdown was less than 5% at that price point. The panic case for H bar is at around 46% down from here at that 5 cents level, which would take some sort of a panic to get to the bottom of that range over here, 5.6 cents. and then that could be it per the risk based models. Again, these models do not account for recession or any major macro downturns. These are risk based model looking at the price action alone. So they do come up, all models do have some inherent bias, but nonetheless, all in all, the conclusion of this video is that price is, although is in this accumulation zone, there could be some further downside. If there is a downside, that downside could be as worse as about between 30% and 45% down from here. And concluding on a hopeful note, if let's say 2027 2028 there is a prolonged alt season, HBAR, in terms of what the price action could do, the 3 standard deviation bear bull case for HBAR, the price could go as high as about $2. If there is a muted rally, then the price could still have make a new all-time high at around 76 cents, and if from the lows of about 5 cents, the rally to 76 cents is above 12 to 13x of that. Sorry, it's above 15x of from the bottom to top. If the price bottoms at around 7 cents, then that's a 10x. If it bottoms at 15 cents, that's a 15x. So coming to the bull case targets for HBAR using risk based models, the price right now, it's the models say that there is a chance that price goes to over $1 in 2028 2029 time period if there is a prolonged alt season. That's about 12x of the current price. If the price were to go to 7 cents, at rally to $1 and 20 cents, roughly speaking, is about if you take a average of 5 cents and 7 cents at 6 cents, then the rally to the $1.20 would be, roughly speaking, 20x. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.